Hello again, everyone. Van Richards here. Today, we're going to look under the hood of the American Century Ultra Fund, and we're going to examine what this fund actually owns. You see, understanding the fund's portfolio composition is crucial as it really gives you insight into where that the money is being invested and the risk that's involved. Please stay tuned for important disclosure information that is at the conclusion of this episode. Let's start with the big picture. American Century Ultra's holdings can really be broadly categorized into three types of sectors. About 65% is in sensitive sector stocks like technology and communication services. Roughly 21% is in cyclical sector stocks like consumer discretionary and financial services. The remaining 14% is in defensive sector stocks like healthcare and consumer staples. Sensitive sectors respond quickly to economic conditions, and cyclical sectors, they tend to perform well during economic growth. And defensive sectors, well, they tend to remain pretty steadily regardless of economic conditions. You see, this allocation reflects American Century's growth-oriented strategy. It emphasizes sectors with high growth potential, but it comes with volatility. It's important to understand that this concentration, while offering the potential for high growth, comes with increased risk. During economic uncertainty or shifts towards value investing, this fund might underperform more defensive or broadly diversified strategies. Now, let's look at some of the fund's top holdings. As of our latest data, that includes companies such as NVIDIA, Apple, Microsoft, Amazon, Alphabet, the Google parent, MasterCard, Meta, the Facebook parent, Eli Lilly, and Chipotle Mexican Grill. This list is dominated by technology and consumer cyclical companies that aligns with the fund's focus on high growth stocks. While these are the top holdings, remember that American Century Ultra only holds about 64 companies in total. It does provide some level of diversification, but understand that the sector concentration risk is crucial when you're investing in a fund like American Century Ultra. Each sector comes with its own set of risk and its potential rewards. For example, technology stocks may offer growth potential, but they can be more volatile and sensitive to certain factors like consumer preferences and regulatory changes. If you want to understand better how sector diversification can affect your retirement savings through your employer's retirement plan, check out my online course at planpickprofit.com. I have a special section called How to Judge Risk, and it dives deeper into this topic. Now, in our next video, we'll discuss the suitability of the American Century Ultra for different types of investors, and we'll summarize key takeaways about this fund. Now, as a reminder, please be sure to read the investment prospectus before you invest any money. Thank you for watching, and I'll talk to you in our next video about the American Century Ultra Fund.
Important disclosure information. This publication or presentation is for educational and informational purposes only and should not be considered investment advice. Opinions expressed are as of the date of the publication or presentation. Such views are subject to change. Richards Financial Planning does not guarantee the accuracy or completeness of the data presented herein. Van Richards is a managing member of Richards Financial Planning, LLC. Richards Financial Planning, LLC is registered with the Texas State Board of Securities and governed by that entity and the U.S. Securities and Exchange Commission. Richards Financial Planning, LLC shall not be responsible for trading decisions, damages, or other losses resulting from or related to the information, data analysis, opinions, or their use. The securities quotes, charts, articles, or other statements regarding the market or additional financial information are obtained from our suppliers' sources, and we believe it to be reliable. However, we do not warrant or guarantee the timeliness or accuracy of this information. Our company, our employees, our information providers, guests, or affiliates are not responsible for damages or liable for any errors or inaccuracies related to this publication or presentation. Past performance is not a guarantee of future results. All investments are subject to investment risk, including possible loss of principal. Individuals or other operational entities should consider if an investment or strategy is suitable for them by referencing their financial position, investment objectives, and risk profile before making any investment decision. The views and opinions of guests that may appear or be sourced with this publication or presentation are not necessarily those of Richards Financial Planning, LLC, and affiliates. Richards Financial Planning, LLC, and affiliates are not associated with the guest and their affiliates unless otherwise stated. Throughout our presentations, we may mention related educational products or services, such as online courses or additional resources. These mentions are intended to provide viewers with optional, in-depth learning opportunities related to the topics discussed. The availability of these products does not affect the objectivity of the information presented, and viewers are under no obligation to purchase any mentioned products or services.